So one question you want to ask yourself is, where should I store my cryptocurrency? Where does it exist? And is there different options for that? And there's advantages and disadvantages to every option. So let's talk about that. Hopefully you'll make some great profit on your cryptocurrency exchanges. Now, what do you do with that profits, and where do you keep that cryptocurrency? Where do you store it? So let's talk about some of the options with that. Now, the most common way, and what a lot of traders do, is they'll leave it on the cryptocurrency exchange, right? You put your money on the exchange, and then it's very accessible for trading, right? Your money's there. It could be converted into Tether, converted into Bitcoin, or however it's converted, and then you can use that to buy and sell all sorts of different types of cryptocurrency. So you leave it on the exchange, and money that isn't invested sits in your account, let's say on the exchange, and it's just sitting there waiting to be invested, maybe something new to buy. And it's all out there on the exchange. In your account is where your actual money is. Now, the problem with that, or one of the challenges, is cryptocurrency exchanges they're vulnerable to hacks. I mean, this is one of the long-standing, especially in the early days of cryptocurrency, there's lots of these horror stories of these exchanges getting hacked and these cryptocurrencies just disappearing. And there was no real recourse for people. They could sue, maybe try to get some money from the exchange, but it was just kind of bad stuff, right? So they are vulnerable to exchange hacks, and understand that, particularly if you have a lot of cryptocurrency out there and you want to take some money off, that you might want to take some money off that exchange and then put it back on when you're ready to trade it again. And usually when people take it off an exchange, they would put in what's called a cryptocurrency wallet. And there's different types of wallets out there. There are hot wallets and cold wallets. And it's a place to put your money other than completely cashing out your money, converting it to your fiat currency, withdrawing it completely, and then using it to buy a boat or a car or invest in something else or pay your bills, whatever it may be, right? But if you want to keep it in its cryptocurrency format, and so it's easy to then put back on an exchange, an example, you would need like a hot wallet or a cold wallet. So basically the difference between them, a hot wallet is it's highly accessible to the funds, so it's all digital, it's all electronic, it's connected to the internet, and as you can see, because it's connected to the internet, it's vulnerable to hacking and phishing and different types of things out there. So it's basically you've taken off your exchange and put it on this hot wallet, but your hot wallet's still all digital as well too. So it gives you ease of use to go back and forth and then put, let's say, back on the exchange, and it's all electronic, and that's good too because you got some kind of redundancy there, sort of backups with electronics and digital backup and all that, but in the cloud, so to speak. But it's also vulnerable to phishing and hacking, maybe less so than the actual exchange. It might be a way to think of it. As opposed to a cold wallet, which is more secure, highly secure. It's not connected to the internet. It's not connected to anything. It's off the digital landscape, so to speak. It makes the funds less accessible. You have access to them. They're on a physical device, but you have to kind of then connect it back into the internet and then transfer it into an exchange, for example. A little bit more a little more time consuming to do that. Not the end of the world to do it, easy to do, but very easy to do, but not as quick and efficient as, let's say, a hot wallet. But the whole idea of a cold wallet is you're going to get a lot more security. You're taking that off the internet where you're going to make it certainly not vulnerable to phishing and hacking type schemes. And if you're curious, you can go do an internet search around some of the different companies that provide these different types of wallets. So you can see and they'll give you more information about why their version or why their hot wallet is better than a cold wallet or whatever. So those are some ways to do some extra research around that if you'd like. Some of the bigger known or well-known hot wallet companies are Exodus, Electrum, Mycelium. If you search any of those, you're going to find out lots of information around hot wallets. And for cold wallets, a couple that have been around for a long time actually are Ledger and Tracer, are a couple of the cold wallets out there. And you can see the example here in the picture of a Ledger one. You can see it's just a physical device, and you can put your cryptocurrency basically on that physical device. Now, you could probably say, well, what if I lose my physical device? Well, then you lost your cryptocurrency. So just be aware of that too. So there's a lot of things you got to consider when you're thinking about your money there. And in terms of some advice or some of those, some ways to think about it. What you want to do is if you've got funds and you're actively trading those funds, then it's okay to leave them on an exchange because you're constantly buying and selling, and that's kind of that core amount of money or crypto that you're that you're trading, right? So you leave that on exchange because you want that to be, easy to do. So if you get on and you're doing an evaluation, like I want to buy now, then you want to be able to just do it right away, and you can have that in exchange. If you have a lot of crypto though, that's really becoming inactive, it's always just sitting in your account, just kind of sitting there, not doing anything, to give it a little more security, then put it in a hot or cold wallet. And we learn the differences between those, and you can kind of make a choice there. For things that are inactive and then they're ready to come back on the exchange if you were deciding you want to trade more with that money, but otherwise, if it's a little bit more inactive, put it in a hot or cold wallet. And if you've got some real large sums of inactive crypto, then to keep it even more secure would be to put it in a cold wallet, to add that security, although you still have to watch that you don't lose your wallet and all that. And that's where you might at that point start converting it to a fiat currency, putting your bank, investing it somewhere else, whatever it is we want to do, to give it, again, more security on top of that. So you're basically looking at convenience versus security is where you're going to fall in these different things. But in the end, it's whatever works best for you. I mean, it all depends on what you're doing now. If you're getting started and all your money you're using is basically for a lot of active trading, particularly if you're like a day trader or something, and you're constantly closing positions each day, then you're going to want to leave your funds on your exchange. If you're somebody who's had some success and you're like, I want to take some money out of the market now, then I might want to put that in a wallet, hot or cold, or maybe you can convert it to fiat. So either way, it's up to you how you want to do it. The key is that you understand that you have options, and then to choose the best option that works best for you.